You should trade S&P or NASDAQ. This is what retail traders keep getting told at the moment. And they set their screens up like this. They've got one ladder and then they've got multiple charts, footprints, book maps, profiles around it. Now that's great information, but this is not how professionals do it. If you're trading the S&P, you need to have a NASDAQ ladder next to it, not on a completely different screen. What this allows you to do is see flow across multiple assets. If you can do that, you know when something's starting to change. This is how all traders have their desks set up, how they have their ladders set. It gives you that sense of change immediately, and you also know why the change is happening. Now, what this is all about is an understanding of which market is stronger. At this point in time, the NASDAQ is actually weaker than the S&P in the way that it's moving. You go and look at this chart, the recent highs reached in the NASDAQ and the S&P are broken in the S&P and the market stays above it. You don't get the same in the NASDAQ. The NASDAQ actually falls away. So this is showing there's weakness. The way to think about this then is like a balloon and a weight. The S&P is the balloon, the NASDAQ's the weight. Now, as the NASDAQ pulls down, it's going to pull on the S&P. The S&P wants to go up. So what allows you to play along in the S&P is the moment the NASDAQ stops dropping. As soon as it stops dropping, it's like the weight being cut off the balloon. That releases the S&P towards the upside. So if we go and take a quick look at how exactly this plays out, you can see that happening. On the ladder here then, what you have got is the S&P on the left, the NASDAQ on the right. Now remember, we were talking about leveraging the position up when this large order appears. So at this point in time, wonderful, we're in the S&P, you're long. But watch what the NASDAQ does. The NASDAQ's trading in this area of high volume, around 29.30. Once the NASDAQ starts to break away from that area, it was that little nuanced move. The NASDAQ jumped 25 up towards 30. As long as it stays above this area of high volume, you can be quite confident in the S&P that this is going to keep going. You see the NASDAQ there, pulled back towards 28, 29. It does it again, but it's not falling back into that zone. This is the point where you become more and more confident on the S&P. Even though it trades through that large order, the NASDAQ's holding up. So now the weight has gone. The balloon is there essentially able to go. This is the point where you can be super confident in the S&P trade. You can add more onto the S&P trade that we've just seen. And you can now start to look first up as a quick scalp. This is back towards the level previously broken. And then beyond that, as long as the NASDAQ stays up, you can play this for the entire move that we discussed using candlesticks and we discussed using footprint and profile. So you've got the first scalp. There's your first exit. For those of you looking at this as you've covered some risk, absolutely. You're now in a great position. The S&P is starting to show its strength here. The NASDAQ pulls back towards 30. The S&P stays up. So this is now showing that strength coming into the S&P. This is the point where the trade very much is on. It is going to work. And it's all to do with that combination of seeing how the NASDAQ's moving in conjunction with the S&P. This is what allows you to get into the trade, to leverage that trade up. So there you see it. You see how you can combine those two things. That moment that the S&P picked up pace was not anything particularly on the S&P ladder. It was seeing that little bit more pace come into the NASDAQ. And when you see that, you know you're right on the trade. This is vital for when you're trading any markets. You need to see the correlated markets.